Hi everyone. So now we will be discussing about life cycle costing, which is also from syllabus area B. Life cycle costing basically looks at the cost and revenues of a product at different stages of a product's life cycle, which is somewhat slightly different as compared to periodic costing, whereas let's say the development cost was amortized over the life of the product. So here, when we are using life cycle costing at a planning stage in particular, what we will do is we will consider the cost and revenues associated with each stage at that particular stage. And effectively, the idea is that all the cost associated with the product, whether it is research and development or whether it is about decommissioning and disposal, marketing, production, all the costs should be written off against the revenues generated from that product, so that we can look at it at the end of the life of the product, that how much overall cost was incurred on that product and how much revenue it generated. And even at the planning stage, the idea would be to try to make sure that, because we can also incorporate the impact of target costing here, that once we have calculated the cost per unit of our product based on the entire life cycle, and then let's say we added a certain profit and we determined a selling price, but then we realize that the similar products in the market are selling at a lower price. So it turned out that the competitive selling price is basically less. Then what we have to do is, based on that competitive selling price, we will revisit each phase, each stage of our product's life cycle, and we will try to design out the cost. We will try to make sure that, whatever initially we planned, the actual now it needs to be revised, since the target cost has been revised. So in different stages of the life cycle, we will identify possible ways of cost reduction, and then we'll try to achieve that target cost because there is a competitive selling price in place. So let's have a quick look at what we have. Life cycle costing, as I said, it involves identifying the costs and revenues at each stage of a product's life cycle, which includes development stage, where product is in the research and design is going on, and then once the product is launched at that phase in production of the product. And if our product is successful, it will see increased revenues, increased demand, that would be categorized as a growth phase. But then after some time, once maybe the alternates are available or competitors are there in the market, other similar products are available, so maybe the increase in demand would slightly, you can say, it would not be that much as it was initially. But that also, if you want to sustain, you have to perhaps reduce your selling price in order to maintain your demand. But eventually there will be a time when no one will be willing to buy the product. At that point of time, it is better to write off this product, dispose it off, and that stage we will be incurring some disposal cost. But talking about the life cycle costing, it's not only about recording or identifying the cost at different stages of a product's life cycle. The objective of life cycle costing could be addressed if we look at the other principles of life cycle costing. So what are the other principles of life cycle costing we have? uh, we want to design out the cost. As we said earlier, if we will look at the market and we identify we need to cut down the cost, since we are at planning stage, we will maybe consider changing the design of the product or something that would help us to reduce the cost. Once all of the decisions have been taken, the plan for target cost is finalized, we should try to launch our product as soon as possible and try to become a market leader. Otherwise, if our competitors will launch the product first, they will obviously capture majority of the market share and be categorized as a someone who actually launched that product upfront. And then one more thing which is associated about the break-even point with the stages of the life cycle. It is expected, that the majority, when the research indicates that majority of the cost is incurred, around 80 to 90% of the whole life cycle cost is committed. Why? Because it is incurred at initial stages of the product life cycle, and that cost is major, like the research and development cost, the marketing cost that is being incurred for the launch of the product. All these costs are very high, and we have to make sure that majority of this cost gets recovered as soon as possible. This is obviously possible if our product sees growth and we are able to attract enough demand so that we can recover our cost. This is what we should try to achieve as soon as possible. So our one of the objectives would be to make sure that the break-even point is achieved as soon as possible. Okay. And then once the break-even point is achieved, after that, what do we have? Everything will be considered as profit after deducting the operational cost, because the majority of the committed cost has already been recovered. So after that, we should try to make sure that our product stays in the market as long as possible. Now, obviously, it will not be possible once the technology becomes obsolete. But yes, at a certain point of time, let's say at maturity phase, as we discussed earlier, we can offer different promotions or discounts or reduced selling prices to be able to make sure that our product still gets sold. See, the thing is that we have already incurred majority of the cost. Now it's the time to cash in. So whatever cost was supposed to be incurred, we have already incurred it. Now it's the time that we should try to generate as much revenue as possible. Even if we have to reduce the selling price, we will go for it, so that we can, actually increase the life of our product. Then, on the other hand, one like some other issues that we have to also consider, that using the life cycle costing, is that we should, because development stage, research and design, these are the things where it will be decided what material we will use, what will be the design of the product, and that will impact the production cost throughout the life cycle. So we have to make sure that we take those decisions which will be beneficial for us throughout the life cycle of the product, and especially when it comes to decline, because during the production process, whatever waste is there, it needs to be disposed of. So we have to make a decision, that because each stage is linked with each other, so that it will not affect the cost in the coming up stage. So we can make all these decisions in the planning stage, especially at the development phase. We should spend more time, and once everything is finalized, we should launch the product as soon as possible. So looking back at our syllabus areas, as I have highlighted earlier as well, we will be following through the syllabus areas. Identify the costs involved at different stages of the life cycle. So let's, in order to cover that part, let's have a look at our technical article. The technical article is basically, one technical article is covering both target costing and life cycle costing. As I earlier explained, there is a relationship between target costing and life cycle costing. So there are different types of costs which are being incurred in different phases. So it has been categorized into 4 different phases where different types of costs are incurred. So this is something that you need to know from exam point of view, related to the theoretical aspect. Also, it would be considered that what are the different costs that are supposed to be incurred. And the costs incurred in manufacturing operation and end of life could be controlled if we pay particular attention at the design stage. This is something which is very important. It will affect the cost throughout the life cycle. Okay, so after looking at the types of costs which are being incurred at different stages, the next thing we need to address is to calculate the cost or profit in both the manufacturing and service organizations. For this, we need to look at one of the examples. The idea, as I told you earlier, is to simply add up all the costs from development stage till the decline of the product. Whatever cost will be incurred will be summed up. Okay, and the total amount of cost will be divided with the expected number of units to be produced over the entire life cycle. That would give us a cost per unit for that particular product. And as I said earlier, that if this cost per unit plus the profit, the selling price, which we plan to set, is more than the competitive selling prices, then we may consider reviewing our life cycle stages and then taking steps to reduce the cost gap. So it is, both of them are linked with each other. Then we have to address the benefits of target costing. So as we said earlier, that if we actually if we are able to work on the life cycle costing and we achieve like if we follow the principles of life cycle costing, it's very clear what benefits we can achieve. We can control our cost, by launching the product as soon as possible. We can capture the market share and we can make our the brand name. We could become a market leader. By minimizing the time to break even, we could make sure that our overall profitabilities can be increased, and we actually also avoid the chances of losses as well. And then by maximizing the life cycle, we can maximize the returns that this product will generate over the entire life cycle. And because it is also compared with target costing, so it would also allow us, because if we are setting a competitive selling price, it would also allow us to, the cost control is already there. It would also help us to attract demand for our product, which is very important. And this is something also which we need to address. Okay, so moving on, afterwards, what we will be doing is that we will be, as I said, we need to practice one example, and we'll try to cover either both of these separately, or we will do one example which covers both of them together in a way that we can understand the calculation part as well. That would be our next video, where we will be doing one practice question, one apart on both or one together. So see you guys for the practice of these two topics.